It's Stu Taylor, and joining me is Jonathan Lee, Battery Materials and Technologies Analyst, Equity Research for Byron Capital Markets. That's a mouthful. Welcome, and
thanks, Stu.
and expound upon that a little and perhaps clarify it for those people who may be scratching their heads.
Sure. So I work for a brokerage firm called Byron Capital Markets in Toronto, and so I'm in the equity research side. Typically what I'm covering right now is a lot of the minor metals that are used in batteries. So look at where is the demand going in the future for those materials, and where are they going to come from.
Yeah, I mean, there are a lot of companies out there, and I can name you several whom I've been involved with in terms of lithium, but we're looking at that whole industry, the whole sector, which is being dramatically and profoundly affected by markets constraints, the European Union, the global situation in all. So it's not always that you have a sound business model and a solid company, but you're really affected by extraneous and tangential components internally and externally. How is this affecting companies who may be well-financed, who have a great story, but are suffering the consequences?
Well, it comes down to valuation with someone with a great business. If it's a great business that there are economic risks, but it comes down to putting a value on that economic risk. For some of the companies that I do cover that are producing and generating substantial amounts of cash flow, it comes down to what are those risks. It could be from macroeconomic risk, but it also could be political risk. Mines are all over the world now, and not everyone has a capitalistic society, as you've seen with in Argentina, where YPF has been taken over, or is being attempted by taken over by the Argentinian government. So it's putting all of those different types of risks, whether it's macroeconomic or political risks, into account.
Are those risks accentuated? Are they amplified because of even though there's an increased demand and a declining supply of what we're talking about, fossil fuels, things organic in nature? The easy stuff has been found. The difficult stuff is requiring a lot of intensive work, talking about horizontal drilling and fracking, additional expense, Russia digging in the Arctic. Is it cost ineffective even with a company that's got an up over somebody else, and the fact that they may endanger their business model and plan by moving into areas that are just going to eat them up financially?
Outside of the oil and gas space, within, say, the lithium space, it's quite segmented. So there's really four major suppliers, and so when you look at that, there is demand outside of what's happening economically on the macro basis. Demand is still outstripping supply. So for those companies in the business, they're able to not only generate, they're more able to price dictate where they want to sell and their selling price.
Yeah, and I certainly can sit here and name you 4, 5, or 6 companies who are right at the forefront in terms of lithium. What haven't we found that's still, do we know, or is this a redundant question by saying what's out there that we haven't yet tapped into? I think there's a pretty good idea, or at least conceptually, where we are in gold, silver, those high-profile commodities that we know. You got to dig deeper, there's less of it, the grades get poorer. Are you open pit, or do you have to do some deep mining? How does that really relate to lithium? Because I don't think most people can get a grasp on it.
Yeah, so there are 4 major producers, and they operate in what the highest grading deposits that have been found around the world. There has been extensive work been done on it. But even at those 4 major mines, there's no shortage of lithium. The problem at this point is logistical reasons, whether or not it's being able to get the lithium out from the mine to a port. There's some political risks in terms of being able to expand production above lifetime quotas. So you're seeing that, and then as well as production capacity at the current moment. So demand has really surged above and beyond the expectation of the major producers, and that's why you're seeing some of the price increases.
What is it that you would like, with your opportunity here to address a rather large audience, to perhaps open some eyes and give us some insight in terms of what you're doing, that to perhaps not only the general public in terms of consumers and investors, but those people who are actually in the corporate world, those people who are in the mining business don't know? What insights can you offer?
it's still a small business, so it's still it's a $900 to $950 million business. So not a lot of attention is being given to it, and for investors, there's really no pure play way of trying to capture that upside in terms of the pricing, because 3 out of the 4 companies are subsidiaries of larger entities. So there's only one company right now that could actually has direct exposure for investors to play in terms of increasing prices and increasing production capacity over the short to medium term.
Are your impressions of this HiAlpha Energy Investment Conference, the first one, your impressions?
I really enjoyed coming here today. I thought there was a very good attendance, and look forward to meeting more people here.